All right. Welcome back to another episode of the Real Estate Investing Club. I hope you guys are having a great day, great week, whatever day it is for you and wherever you are. As always, it's Friday on the podcast, so we're bringing that good Friday energy to you. Today we have Tyler Vinson with us here from RE Tokens. This will be a little bit of a different episode for all you guys out there who have been wondering how the blockchain, how crypto, that whole world is going to be affecting real estate. Tyler is here to talk about it. He's from RE Tokens, and they do tokenization for real estate syndications. I'm not going to try to go into it more than that. I'm going to let him explain because obviously I don't know enough to be dangerous. But he also has a lot of experience in syndications and multifamily development. So a lot to go into here. Tyler, thanks for hopping on the show.
Yeah, I appreciate you having me, Gabe, and look forward to talking real estate investment and the future of it.
There you go. I told you before we got on here, we always like to start with stories before we get into things too technical. So why don't you take us back to the beginning of your story in real estate and tell us how you got here?
Yeah, in my early 20s, a buddy of mine came home from college, UW actually, and
Go dogs.
yeah, right. And he said that a couple of his frat brothers had gotten into buying apartments, and I thought to myself, well, that sounds pretty darn cool. And so we started to investigate it. He drugged me to a couple of those local 2-hour seminar upsells at your local hotel, and all those, although those weren't really good, it did get us thinking in that direction. We signed up for one. I'm a huge advocate of education. I think I do it just constantly every year. I think it's a big part of what got me to where I was at, but this particular education wasn't good. And so right after that, we just he actually said, well, let's just go buy some real estate. And so we went out and bought a couple duplexes and just jumped in with both feet. And from there, I quit my job probably a year later and got my real estate license and started just focusing on investment real estate. So that's how I got into the space.
Nice. I love it. I was laughing because you said at your local hotel. And I feel like that is just where all those 2 hour, like you said, kind of seminar-y based real estate classes happen is they're at hotels. I went to like so many of them back in the day, and I don't know why people don't get other venues, but that is definitely made me
Yeah.
laugh, made me reminisce. Um,
Yeah.
Awesome. So you got started with duplexes. That's how I got started. It's a great way, especially if you're doing house hacking. And then, so you guys went from the duplex, and I'm sure you started, the ball started rolling and getting pretty big pretty quickly. At what point did you guys branch out? And tell us a little bit about the trajectory that you took from there.
Yeah. So actually, as we got into it, I decided I loved the sport of real estate investment, and he decided he was going to take a different job and just give his money to me. And so, yeah, from there, I did a little bit of it all, everything from houses to flips. And then got into multifamily, started to really specialize. I went through the great financial crisis and everything. So I started to specialize in creative finance, working with private investors, working with a lot of seller financing and creative deal structure surrounding that, and then just started to build out. It was in pretty short order where I realized that standardization and scale, at least for me and my company, was going to be easier in the multifamily world. So I started doing that, C class and B class apartments with buying some office buildings and some retail and things like that along the way. And then more recently got into storage facilities, purchased Class A storage facility. And so that's really the real estate trajectory that we took, always with creative finance being the backbone of that. And working a lot with private investors and raising capital. And that's when I started getting into syndication. For example, the storage facility was a syndication. And once you get into those bigger assets, that model is more favorable. I did a lot of private debt when I was coming up in my career. So I'd land awesome seller financing, negotiate that. In fact, I wrote a book on it. And I would work with private investors for, the down, the reserve, rehab, all those good things. And so that lasted good only up to really a certain price point, and then the level of the debt, because you pay investors a good return, was significant compared to doing the equity, because I did a lot of repositionings where I would buy multifamily properties that were, maybe break even, not managed well, hadn't been updated, come in, put some money into it, enhance the operations quite a bit. And then, of course, there was nice equity and nice cash flow after that. So that's how I started piecing it all together.
Nice. For anybody who kind of dabbles in asset classes, I always like to ask, what's your favorite? You said self storage. That's something that I absolutely love buying. I've never done multifamily. We buy mobile home parks, RV parks, self storage facilities,
Mhm.
that kind of stuff. So, of the assets that you've been into, which is the one that you've enjoyed the most?
Well, multifamily was definitely my favorite game for a long time, but I think we both live in Washington State, and Washington, like several states, has made it much more challenging in the multifamily space. And so, uh, right now, definitely my storage facility is my favorite asset class. It's some of the properties we're looking at for acquisition right now. I still
Nice.
buy multifamily, but I got to give the lean to the storage at the moment.
There you go. I love it. So I mean, you've mentioned creative financing a few times in your story there, and that is one thing that I love to talk about. I've gotten seller financing on a lot of my properties, even commercial assets. You can get seller financing. So, since it's something that you're also a little bit passionate about, let's talk about how you do it. When you approach the seller, it's always the most crucial step is getting them comfortable and willing to do creative financing, to do seller financing. How do you kind of tee up that conversation, and how do you negotiate the seller financing structure that you propose?
Yeah, it's all about creating value for them and solving problems for them. So, what you don't want to do is call somebody up and say, "Hey, are you willing to hold the note? Hey, will you do seller financing?" That's typically not a success path. Instead, I would say, I don't know if this works for you, but a lot of sellers that we buy from prefer to get a nice size down payment and save a whole lot on their taxes and actually keep a monthly cash flow on the property they know and love. Is that the type of offer you'd be interested in talking about? And I go on to educate them on, what it may look like to save a large amount in taxes, and instead of paying that amount in taxes, keeping their money before the government says it's not, against that property, secured against that property, making an interest rate, right? So now they're saving taxes and using that tax deferral to make an interest and keep an income. So they really go from being an active owner and investor with all the responsibility and liability to becoming a passive investor on an asset that they already know and love. And that's normally the approach that I take with them.
Nice, I like it. Do you ever propose interest only financing, or is it always principal and interest?
I used to, and then I went through 2008, and I started being a lot more conservative in how I structured things. And the principal and interest combination is what I've personally enjoyed, because you can let it sit there and get that principal pay down later, do cash out refis. So instead of doing interest only, I've been really aggressive about negotiating the rate. So
Mm,
I've got several deals that I've done at 0%, or we just did deals at sub 1%, sub 2%, and things like that. So a lot of times sellers want a price and they'll get really
yeah,
hung up on their price.
right.
And that's fine as long as we put the type of financing in there that's going to make sense, because I'm doing it on a cash flow perspective. And a tip when you do that is you're going to need a long-term deal. If it's going to be a 3-year balloon, having really great financing isn't that important. But I'll amortize most of my deals between 27 and 30 years with no balloon. And so then when you get that type of financing, it's extremely powerful over a long period of time.
Nice, man. Zero. I have yet to do 0%. The lowest I've gotten so far, I think it was 2.63% on an 11-year note. And I mean, it's a great deal, and you just can't pass that up. But anything below, I mean, 1%, that's crazy. But like you said, it allows you to reach the seller's inflated numbers. Sellers, they always think their property is worth more than it actually is. They're looking at it, they put their blood, sweat, and tears into it, and they just feel like all that effort is worth, it's worth a lot more than the market thinks it is. But you can usually not, maybe you can't hit that exact number, but you can get a lot closer if you do, like you said, seller financing, no interest will allow you to make that payment, that the actual price that you offer them, a lot higher. So yeah, makes a lot of sense to me.
Yeah. One caveat I'll put there is you got to be careful, especially nowadays. Closing attorneys seem to, there's an IRS rule of fair market interest rates and some things going on like that. So you may get pushback from your closing attorneys, and there is some IRS rules to consider when you're going to go for interest that low. But there, like everything, there's also legal workarounds that get some good professionals in your corner and you can navigate those.
Interesting. I actually don't know anything about those IRS rules, so I'm
Hmm.
glad you told me here. So on that or on that note, let's move over to tokenization. You are the CEO of RE Tokens. You guys tokenize real estate. I'm That's about where I'm going to leave it because I want you to explain it to me. So tell me about the business. Tell me what you guys are doing and how it's been going so far.
Yeah, absolutely. So I'll just explain why I got so passionate about it and why I've made such a major pivot from my real estate investment career, which we talked about, into tokenization of real estate, which is really a third party service that services third parties. So there's kind of two sides to the token, pun intended. The first side, it was solving my own problems with it, where I would have millions of dollars of equity in my real estate, but it's illiquid. So I would either have to sell the asset in total or go through some type of cash out refi, bring in private debt, do some of these things to try to access the equity in it. And although sometimes that can be a great strategy, sometimes it's extremely cumbersome, difficult, expensive, has a risk
And
level to it.
just to jump in there,
Yeah.
for some assets, especially self storage, mobile home parks, if they're in a rural location, it is near impossible to get a bank to lend on it. You have to get a local bank, and even the local bank sometimes won't touch it. So, for instance, if you do seller financing and you have that balloon payment, you're going to have to refinance, and you have an asset that's in a rural location, it might be just very very cumbersome to get yourself some debt to cover that balloon payment. So I totally
Yeah.
understand why in that situation, being able to tokenize it would make such a big impact.
Yeah, so tokenization, and I'll explain exactly what that is in just a second, but it opens that doorway to potential liquidity. So there was that side of it. And then there was the other side as I got into syndication. As with most syndicators on these larger properties, we're working with accredited investors only. And so that really shrinks the pool out of those that can get involved. And so when I was introduced to real estate on the blockchain and tokenization was right about the time I was coaching my daughter's soccer, and I had come off the field, and a good friend of mine from high school had come up, "Oh, Tyler, how you doing?" We exchanged big hugs and all that. And she says to me, she says, "It's so cool to watch what you've been doing in real estate and the success that you've had." And she said, "Me and my husband, we've been working hard and we've been saving up, and we'd love to invest some money with you." And we both just looked at each other, and she answered, and she said, "But we don't have enough money, do we?" And that broke my heart because at the time she was right. I had a $50,000 minimum. Most investments were accredited only, and they weren't going to meet that criteria. So here I am thinking, man, it's so hard to get liquidity out of my real estate, equity out of my real estate. There's people that I care about that I'd love to get involved, and there's just no real meaningful way to do this. And so that's where I that was about the time I got introduced to real estate on the blockchain, and then ultimately led to tokenization. So let's just stop for a minute and tell the audience what the heck is tokenization and what does that mean. So let's start in terms of a syndication. So when you do a syndication, what you do is you sell equity. They're LLC membership units, or you can call them shares. But what you're doing when you raise capital is you're selling those shares or those units to private investors, what we call limited partners, and they're buying into that investment deal. And then they're just in that deal until you sell it or maybe cash out, refi, or do whatever. So what tokenization is we just add a digital ownership component to that structure. So now when you're selling the membership unit or the share, you're actually selling a token. So it has a digital ownership representation. Because normally when you buy into these deals or raise these funds, you get a subscription agreement and then you're on a spreadsheet, and that's kind of it. It's more of a mental construct than anything. But when you add the digital ownership component to it, there's something tangible. They can actually see their ownership in there. And then when we make that,
So
yeah, go ahead.
does that see, I don't know enough about the question that I
Syndication.
was going to ask was,
Yeah.
does that go into your wallet, like a Coinbase wallet or something like that, or how is that actually represented in online?
Yeah. So, like Coinbase, since you brought that up, what they have is you can call it a wallet, but let's just call it an account, right? The crypto world has wallets, and you can do that, and technically maybe that's it. But there's this whole Web3 infrastructure that's involved with like something that we do, a marketplace that I'll talk about in a minute. There's this whole Web3 infrastructure because you don't need to understand what I'm saying, but I'll just tell you about the parts of the engine real quick. There's a transfer agent and custodial accounts, which you could call a wallet or an account, and an ATS matching engine. There's all these things that happen behind the scene that make this whole thing work. So, yes, there's that Web3 infrastructure, and yes, there's something called a wallet, but the user experience is much more Web2, like you're going to interact with your online banking account or something. And it's not something that you have to custody yourself and worry about the keys and worry about those, getting hacked, so on and so forth. So these are securities. And so there's a lot more, to that. I think based on the time frame of the show, we don't need to dive in there maybe another time. But let's just say what it does for people. Let's just talk about that. So we know what the ownership is now. The tokenization is a digital component to this ownership in like an LLC. And then we put that on the blockchain. And when that happens, it's allowed to participate in an ecosystem that can trade similar to stocks or crypto, right? Where real estate hasn't had that before. If you invested in a syndication, you're locked into that for 3 years, 5 years, 10 years, 15, 20, sometimes I've heard of. You can't move that around, right? It's very difficult to sell those. Well, we believe in an ecosystem, in a marketplace where you actually can sell or buy more of those private placement shares. We call them membership units or shares. Well, now they're tokens because they have that digital component. And so two things happen that really helps. One is now a syndicator or what we call an issuer like me or like you can actually sell those in this marketplace to gain liquidity and in whatever amount that we want. And our investors that are invested in the deal can also list them in that marketplace. And assuming there's buyers, right, for that, they can also sell those. And it's a pathway to liquidity that has never really existed for investors like that. And on the other side, folks that don't normally have access to this type of investment, or maybe they don't have the money, like my friend, can go through KYC, which is just creating an account like you do with any investment platform, Charles Schwab, anything like that. But you're just going to create an account. And now those projects that are listed on this secondary market, it's called an ATS technically, but this secondary market for these private real estate shares, they can buy those. And maybe, one share is $1,000 or $500, and maybe they only have a couple grand to invest. They can actually get involved with real ownership. It's not like a REIT where you're investing into a fund that just has indirect exposure. This is owning a real piece of the real estate for real cash flow, real equity upside, real K1 tax benefit. You're an actual owner in there. And so, stocks and crypto have been able to benefit from this new digital age, but real estate's really been left behind. And that's the problem that we've set out to solve. and the marketplace we're launching for everybody to be able to participate in.
Very cool. I see a lot of questions are popping up in my head. We don't have enough time to go into all of them right now, but I want to ask two questions: one for the GP side, one for the LP side. Let's start with the LP. So you're equating it to something like a stock. So like buying something on the stock exchange. When you do, if I bought a unit of, an Amazon, it went up, 1%, I could sell it and then take that 1% out as cash. Is that the same kind of concept here, that you can buy and sell within a day, within a week, and take the equity out? Or is it not quite the same?
No, you got it. Let's say you buy one of these real estate tokens and the next day you decide to sell it, you can go list it in that marketplace. And if there's a buyer willing to pay that price, then of course you will sell it, and there's the liquidity. There's all sorts of market concepts like market makers and settlement that we won't get into today, but
Mm-hmm.
just from a high level, yeah, absolutely. You can buy it and then resell it. That's the point, right? Is to be able to have the opportunity for liquidity.
Okay. And then from the GP side, I'm thinking about setting this up. Usually when you buy real estate, you create this huge legal document. It shows, what like for syndications, the shares, there's X number of shares and they're each worth, X percentage of the equity of the property. So I guess when you're setting up, when you're having your lawyer draw up I'm assuming it's the same
Yeah,
thing
there's
as
security documents. Yeah.
yeah. So it says that this specific token is equal to 1% of the equity of this property. Is that kind of how it works?
Yeah, it works the exact same as syndications work today. We're just adding that digital component, and there's probably disclosure that there's also digital ownership. And so, yes, that's normally what you'll create. If we get real technical, they're often just called LLC membership units in an operating agreement and a PPM. And tokenization is just making there's still the LLC membership units. They just now have this digital component, and you typically do put evaluation on that. Right.
Cool. So yeah, I love it. I think you guys are onto the right thing. There's definitely opportunity here, and I feel like, especially from the GP side, it'll make from both GP and LP side, it'll make things a lot easier when you're raising money for your deals. And if you're in a deal that you want to be out of, you need it for, I don't know, your kids braces or something like that. You can easily sell your share, your token, and take that equity back. So I love what you guys are doing. We have run down the clock though. It is past the 20-minute mark. So I'm going to push us into the quick question round. Are you ready?
Sounds good.
Let's do it. Starts with education. It could be any form. It could be a book you've read, a conference you've gone to, mentorship program you've been a part of. I just need two recommendations, one for general life wisdom and then one for real estate.
I got to go with Limitless. It's a Ken McElroy event in Dallas that we've gone to the last couple of years. You actually kind of get both there, but certainly I would say it's real estate and investment leaning. And for life in general, it's hard to beat what Tony Robbins does, in my opinion. I always go there and come back a different person.
Nice. Yeah. I still have not read any of the Tony Robbins books, but I've heard they're pretty good.
Yep.
All right, next question is for your younger self. Let's go back to the Tyler who was just graduating college. He saw that friend of his who was into real estate and thinking about joining. Go to him, look him in the eye, give him one piece of advice moving forward.
Consistency. That's the way to make that vision in your head a reality, is just relentless consistency on what you're doing. Don't worry about trying to hit a grand slam or a Herculean effort. Just stay at it day in and day out.
That is the one thing I would tell myself too, is be consistent, be disciplined, and everything else will fall in line. So great advice. Next question. You've mentioned living in Washington State. Deals are few and far between. So there's a whole world out there, a whole US that has ripe for the picking, and there's lots of opportunity. Give me the single metro you're most excited about investing in today.
Well, this one's going to be different than most due to where I live. But for me, it's North Idaho when things were,
Coeur
and
d'Alene.
South Idaho, including Boise. So Idaho State, I'll say, when the whole pandemic and everything hit, you saw strong migration into Idaho State. And I think that it's very much a lifestyle state. It's got, favorable laws and a lot of opportunity, for expansion. So that might not be the most popular answer, but you have towns like Coeur d'Alene and Boise and others that definitely are on the national radar.
Yeah, Coeur d'Alene is beautiful. I love it out there.
Hmm.
All right, next question is about finding deals. It all starts with getting in contact with the seller and penning that purchase agreement. So, what's your favorite way to generate leads and find new deals?
Yeah, just literally trying to get sellers face to face at whatever cost. I don't use coffee, I use tea just because it's a little bit different. But everybody's so AI oriented, so virtual assistant oriented. So, are you interested in selling your property? Are you interested? Gosh, if you find somebody that owns a portfolio in the area that you want to buy, and you could get them out to a cup of tea or two and just get to know them, you will get opened up into their world to where they're getting very callous on people trying to, race upstairs, so to speak. So that's what I would do is I would find ways to connect with them. We literally have door knocked and got deals, shown up at the property to catch them like working on a Saturday on a deal. Or when I do call them by phone, I normally just present myself as a landlord in the area, getting to know other landlords. I've been on the boards of landlord associations and things like that. So I'll leverage any of those relationships and just say, hey, just looking to get together and talk a little bit of real estate and get to know my neighbors. If you own anything in the same geographic area, that's probably the best lever. Say, hey, I'm your neighbor at 123 Main Street. We both own a little apartment building over there. And I thought it'd be good for us to catch up and get to know each other.
Nice. Yeah. Nothing can replace shaking hands and making friends. That is for sure. Especially in real estate. It's a very relationship oriented business, like all businesses, really. But real estate in specific, I feel like, is more oriented that way. And it is a great way, if not, and a fun way to find deals. So it's definitely, you can send out a million texts, but it's not nearly as fun as actually going out there and talking to somebody.
Well, and they normally own portfolios. So once you are able to get the conversation about one, I'll often buy their portfolio. Sometimes that's all at once. Sometimes, it's a few at a time, but you get one seller with a large portfolio. You don't need to spend all that time, effort, marketing dollars, and everything trying to create all these new relationships. You just foster that one, and boy, it's a game changer.
Absolutely. All right, let's talk about lessons learned. Not every deal we get into goes the way we expect it. In fact, many times, if not every time, something goes wrong, and that's when we get to learn a lesson. So, what was a deal that went a little bit sideways for you, and then what was the lesson you pulled from it?
Yeah, the lesson is leverage is a double-edged sword. Back in the great financial crisis, I had just only been in a couple few years at that point. I got in the early 2000s. And so I was highly leveraged. That's how I was being taught, right? Is to just, buy something, close on it, get a HELOC and keep running. The market may flatten out, but it's never going to drop. I mean, and I was fairly new, so I was buying that. And when kind of the bottom fell out. And for us here, it was August 2008. I remember my lender calling me. You don't have time to get into the story, but that moment really changed everything. And I, lost a few properties. Nobody was buying and selling, and I was in the real estate space. It also was where my current model was born out of. Is that tough situation? But the lesson there is don't over leverage. Always pay always play the game of cash flow. So I learned that lesson painfully early. And now, when this last run up came in commercial, so many people are caught with these short term loans with rates that have gone way up and they're losing their properties and they're in big trouble. And just like I explained before, I have this low interest, long term seller financing. I don't care what the market does. I'm cash flowing and gaining equity every month, no matter what.
There you go, man. I don't have to add anything to that. As it's a hard lesson to learn, but it is definitely a good one.
Yeah.
All right. Next is about the highlight reel. Sometimes deals go wrong, but other times deals go absolutely right, and they stick in our mind as the deal that just kind of we walked off into the sunset with. So give us your highlight reel. What was a deal that just went right for you, and tell us about it.
Yeah, so I'll talk about the storage facility, which is a few years old now, and that one I was doing some marketing, and so my name when that came up, it kind of jogged the memory of one of my childhood friends' dads, the parent, and he was in a situation where he had built this beautiful brand new storage facility, but he was a custom home builder, so he didn't have experience in that. But he knew of me. Just again, I was childhood friends with his son, and just knew of me in the community. Spokane, Washington is kind of a small community when it comes if you've lived here a long time. And he called me up one day and to say, hey, I was thinking about you. In fact, for him, there was a spiritual aspect, and he felt compelled to call me. So we sat down, and he ran the numbers and basically said, I need, you know, X amount in cash, and I needed to close within 60 days or so. I looked at the deal. I knew it was a great deal. And I said, yeah, let's do it. In fact, I think it was 45 days, not 60 days. And I had to go syndicate and raise multi-millions of dollars within, a very short time frame, like 3 weeks. And I got really close. I was about a half a million short. And I said to my assistant at the beginning, I said, look, I am just going to program my mind right. I'm going to visualize. I'm going to believe. I'm not going to accept failure as an option in my mind. I'm going to manifest. I'm going to, pray. I'm going to do all these things. And man, if somehow this works, then I know that it works, right? When people talk about visualizing, the end right now, and it will become your reality, I believe very much in that. I did it on that deal. I was a half a million dollars short with like 24 hours to go. Got an unexpected call. Wasn't even really planning on these guys investing or this guy investing. He calls his buddy. They both invested with me before, but it didn't seem like their cup of tea. Anyway, I just showed him the facility. I walked him around, and one guy was like, well, or it was 450 that I needed. One guy goes, and they didn't know how much I needed or didn't need. You can't act like you need the money in the next 12 hours. That's not going to work. But I just had faith in the process. That's what I'm talking about is faith in the process. And one guy just goes, well, I'm in for 250. And the other guy goes, well, I'm in for 200. And that was it. And by the time I got to the office, there was people calling me trying to get in, and I oversubscribed the deal. And we doubled the value of this multi-million dollar asset in like 18 months or so with the proper management. So it was, I wasn't out searching for it. I didn't cold call it. The whole thing came to me, and that's one of those right out into the sunset stories.
I love it. All right. Well, with that note, it is leads us to the last question. This is for the listeners. You have given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a two-parter. Where can they find you, and then what can they expect when they reach out?
Yeah, so our website, retokens.com, there's a quick start guide to real estate tokenization that's a free download on there. I would definitely recommend that. And then the company, RE Tokens, and myself are both on LinkedIn. And when you reach out there, you can expect to get some free education about real estate tokenization, you can set up a discovery session for what it can do for your projects and learn more about it. And we're happy to direct you in the right way.
Perfect. I'll put that link in the show notes. So if you guys want to reach out to Tyler, all you got to do is click that little more in the description. It's going to pull down the full description, and in there you can find his links. All right, man. That wraps it up. Thank you very much for hopping on the show.
Yeah, I appreciate you having me. It's a great conversation.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe, at therealestateinvestingclub.com. If If you guys want to support the show, just leave us a review. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward